what is the bare minimum you need to include in a bookkeeping service as a beginner bookkeeper? This is the first in a 3-part series in which we'll go into beginner bookkeeping services, intermediate services, and advanced services.
Welcome to the Bookkeepers podcast, sponsored by Xero.
So, brand new bookkeeper, or actually like new to bookkeeping as a business, like we've all been there, like we've got the qualifications and then we're thinking, well, I need to get some clients now.
Yeah.
What do I actually sell them? And that sounds crazy to say it, but I felt like this. I was like, what does that service actually look like? I know I can do it. Like, I feel like I should know enough, but what does the like delivery part of it look like?
Yeah. So today we're going to be talking about level 1.
Yeah.
Like, what is expected? If you're going to start charging for these services, what do you need to be doing to be able to say you're a bookkeeper and that you are providing these services that actually a business needs? And then we're going to go over level 2 and level 3. So like intermediate and advanced. So like this is like a mini series in this podcast.
Love that. And do you think that there's like an expectation from the client? Because I always think like we're trying to serve the client. And when they decide they're looking for a bookkeeper, I guess there's something that they're looking to find. Like they have an expectation of what you're going to be doing. So how do we align like what we do with that?
So I think firstly, when you are talking with people, you need to understand what services they're looking for, because everyone will be looking for something different, but there are kind of like baseline, like this is what you need to be doing. Hopefully the client that you have already has an accountant. If you're going in as a bookkeeper, you are going to be dealing with the day-to-day financial tasks of the business and keeping them compliant to the point of things like, you know, you may be offering VAT services if they're VAT registered, but otherwise you are really going to be preparing the books for the year-end compliance, which will be passed over to an accountant, because we're talking about bookkeeping services here. So you're not going to be filing the year-end accounts. You may not be doing the self-assessment tax return. So this is like, what does a bookkeeper do before accountancy and compliance comes in?
And I always feel like when you're speaking to, you must have found this too, like often you're speaking to a small business owner and they're like, well, I think I need an accountant. And then you're like, but I think a bookkeeper can do this. And there's always this grey area between what's the difference between a bookkeeper and accountant.
Yes. So you need to decide what it is that you're happy. You may not have your self-assessment level 4 qualification, because you don't need that to be a bookkeeper. So you may not have that. So you may choose that you don't want to go down that route. You may not have the qualifications to be able to file year-end accounts. So we're talking about, okay, so what do you do if you don't do that bit? How can you still offer an amazing service and be a great bookkeeper?
Nice. Okay, so it starts with the compliance. So although the client isn't looking at it as a compliance task, they're looking at it as, oh, I've got this bank feed in my accounts and I need to do something with it. Yeah.
They don't know necessarily what they're looking for. Maybe they've had a bookkeeper in the past as well that's done a certain job. So your job when you first go in and have a conversation with someone is like, what does your bookkeeping function look like right now? Who is doing what? And maybe they don't know. Maybe someone was doing something at a computer and they're not really sure, and they spoke to the accountant and everything's kind of been done, but they've retired or they've, dropped their hours, whatever it is, and you now need to step in. So there's always I always say this, you have to become a detective, don't you? You have to kind of go, you have to ask the questions and find out and see what's happening. It might be a brand new business as well that you're working with that's never done anything before. So you get to set up from scratch how you want to do it and implement what software you want to implement and create those systems and processes that you want to, which is it's a nice way to do it. I would always say as well, like, try and take over if you can at the beginning of a financial year, especially if it's like a business that's been going for a while, because if you're responsible for partway for another year, I feel you're responsible for that whole year. So you have to review everything that somebody else has done. If an accountant has filed and done the year-end accounts and that year's kind of shut down, it's nice to start at the beginning of the year. So you need to find out, is there an accountant involved? If there's not an accountant involved, do they need that? Do you cover those services? If you don't, you need to help them find someone and explain. I take this to this level, and then we need somebody to do the compliance. So, and you need to understand if they are already registered for certain taxes. So VAT, PAYE, corporation tax. Is there any personal tax? Like what are they looking for? And then we need to start doing the bookkeeping.
Yeah. Okay. This is really interesting because I see us, I think the expectation is we step in, we're given some kind of folder of invoices and, there's a bank statement and we're going to go and record everything. But for me, coming from I've got an internal audit background and I'm thinking like there is a part of me that wants to go back and validate like where am I starting from? But you feel like that is it's definitely crucial from like a controls point of view.
Oh yeah, we're going to be doing that. All I'm saying is when that year is shut down, you're no longer responsible for that previous year. But that starting point, that balance sheet on day one of that financial year is 100% your responsibility.
And do you feel like that fits into like a beginner service, or do you think the accountant should be doing some kind of handover where assuming an accountant's involved, an accountant says, I did this, these are my working papers? And
absolutely. But your job may be to say, what I would say is beginner services, ask the accountant for the opening balances at that time and check that when you create a trial balance on day one or balance sheet on day one of that year, that it matches what the accountant has. That is your job.
Yeah.
Your job is to check. Your job isn't to create it.
No.
But your job is to say, and then you can go back to the account and say, these figures aren't looking right. Could you review our opening balances again? You don't necessarily have to do the adjustments as a beginner bookkeeper, but your job is to check that you're starting from the right place.
Nice. Love that. Okay. So then we're going to start doing the bookkeeping.
Yes.
What do you reckon the first task is then?
It's usually like making sure that you've got a bank feed.
Yeah.
Making sure that that's connected. Again, making sure that the opening balance on the bank statement matches what's in your accounting software so that your starting point is correct. And checking, monthly with that bank statement, is it still correct? Because is there any items that have been missed or lost? Yeah.
And sometimes that happens. And this is even just really interesting in terms of like automated bank feeds, because we're obviously in the UK and this is really common, although we know that loads of businesses don't have bank feeds. What did Xero say about how many people were actually, like lots of people are using Xero but haven't actually connected a bank feed?
So it's only like 37% or something had a connected bank feed of the people that had the cloud accounting software, something like that.
Yeah, it's mad, isn't it? Because it's got all this functionality, but then when you look at like we look to the States and what people are talking about, or when we were in Canada, like some of this is like new and not the way that even some of our clients over in Ireland will say, well, that doesn't have a bank feed, so we can't do it that way.
Yeah,
so
and they're still uploading CSVs or creating, it wasn't that long ago that I was like creating the lines myself, writing them out, there wasn't even the CSV then. So it has happened quickly, but if you can get a bank feed in, that kind of then gives you your like daily task, like you can clear it down. So the aim is to make sure that every item that's coming into the bank has a sales invoice associated, which you will produce in the software. So you'll raise the sales invoice and make sure it's got the correct nominal code, correct date, correct due date, and and the client may be asking you to raise sales invoices ahead, and then you'll have sales invoices that are outstanding that haven't been paid in. But the bank feed is a good place to start, because you're like, oh, there's sales invoices. Like,
what paperwork needs to go with that transaction? And also you were mentioning about doing the bank rec at the end of the month just to prove that you haven't missed any transactions. And I think it's really important to do that, because sometimes a bank feed can drop off, and it's just making sure that, it's so easy to rely on automation. I think this is why people get afraid of it. But actually, if you're just every month just double checking, okay, everything has come through, nothing's duplicated or anything like that.
We have something with we use a company called Thinkific to host our courses and membership, and there's something weird that happens every time when the bank feed comes in, it deletes all of our income, and I have to go in and restore. So they're all in there in the account transactions in Xero, but I have to go and restore them every time.
Weird.
It's like it automatically just rejects them and deletes them, and we haven't been able to. So there's nuances, the other thing is, how many bank feeds or how many credit cards, how many online payment services are there? Is there PayPal? Is there Stripe? Is there Go Cardless? Is there credit cards? Is there any other, like, what other kind of accounting
transactions? So and I'm thinking as well, because you might just see, oh, well, there's just a payment going to a credit card every month. And a business owner might be like, well, that's just me paying for, I don't know, a computer. I'm paying off £100 a month off of this computer. And you're like, no, because actually what we need to do is record the real substance of what that transaction is and where it needs to go in the balance sheet.
Because there's a liability there.
Yeah.
There is like £1,000 loan there that you've got to pay off. So this is
like
double entry.
This is like core bookkeeping stuff that we get excited about.
You don't just send it out. What's the other effect, and where is it? And
what about you mentioned sales invoices? So obviously that's going to be for a service-based business probably, or a product-based business who invoices their customers. What about if you've got like a retail store? So I'm thinking about like they might have cash, they might have a card machine, and they're going to have some kind of receipt coming out of that, a Z-read and things like that.
Yeah, so you're going to have to reconcile to the till as such. So there will be some kind of online software or a physical till. I mean, I've had it before. I used to do like actual till rolls and match them all up, and they would do like a daily, they would cash up at the end of the day and figure it out, and then you'd have to reconcile that and how much cash is sitting in the shop. I used to do a jeweler's and it was like that. And
so you're going to take that like reading and you're going to somehow gross up in your accounts, adding in what the sales lines were for different types of products, whether there was any VAT involved or not, depending on what they're selling. And then you're going to also record like the transactions in terms of what cash has moved where.
Absolutely. And this is the thing you said there about grossing up. So when people are paid by things like payment services like Stripe, you get the net in the bank account, but they usually have taken Stripe fees off of that. So we have to figure out what was the full. So maybe, I don't know, someone has paid you £100, but like £97 comes in.
Yeah.
Because £3 of Stripe charges.
Yeah.
And this is where bookkeepers need to get this right.
Yeah.
What was the actual sale value, less the charges? That's what's hit the bank.
And you so often see with the client, they just put that's not £97 in as, it was a sale. And you're like, no. And the reason that's important is because the client doesn't really know. If they were to work out the gross profit on that type of sale, they haven't got full visibility of the costs of sale for that activity until they gross it up and they're like, oh, well, every time I sell one of those, I have a £3 fee.
Yes, absolutely. And in the future, making decisions, is this the correct payment service for us? How much is it costing us?
Yeah.
They wouldn't know that. It would just be the net amount going into the account. So sales is really important. So you may have to raise sales invoices for the service. They may raise sales invoices and you're just they may do it in like Xero QuickBooks or something, and you're just like matching it off and seeing when the money's being paid and keeping an eye on what ones are still outstanding. You may be recording like online, something like PayPal and Stripe and grossing those up, or there might be like physical tills and cash, and I've done community clubs and working men clubs and all of that in the pub. Like they're all still going, they all still use cash.
And there's probably some little notebook someone's got where they write down so-and-so's paid.
I mean, I remember we used to do for this working men's club like a lottery.
Oh, right.
And everyone used to pay cash for this lottery and then money was coming out of it. And oh my goodness, it was, but that kind of stuff, people need bookkeepers for all different types of businesses. So any money coming in, you've got to go, is this the full amount? Is this the wholesale? And you've got to record it, raise invoices, raise receipts, whatever it is you need to do to enable that double entry in the sales figure is 100% correct.
Nice. And then on the purchase side, money outside, again, we're looking for every transaction that we're seeing in the bank feed, that there is some corresponding third-party paperwork that verifies that transaction.
Absolutely. We need receipts. Funny, this morning, me and you went and got a coffee and a cup of tea. And we was talking to them. It was like, well, what's your podcast about? The Bookkeepers podcast. And then their receipt machine didn't work. They're like, you really want receipts, don't you?
Luckily, I paid on my personal card, so that was just on me, Joe. That coffee.
Oh, thanks.
You're welcome.
Oh, okay. So I haven't got that headache later when I'm doing the bookkeeping. But yeah, so every transaction, needs to have some corresponding document, especially when you're claiming VAT.
Yeah.
You need to have a VAT receipt so that you can claim the VAT.
That's a good one, actually, because like really often we'll see people saying, like, there's always this grey area around, there's so many grey areas and everything. There's always this area about, like, if there's been a transaction like this before and we've got paperwork from before, do I really need to have a receipt? Because you'll get clients who push back and go, oh, I pay that every single month. Or there might be like a certain product that you buy over and over again, or it might be like a small amount, like it might be a £5, and you're like, oh, I lost it. Can I still claim VAT on it? And strictly speaking, you need the paperwork.
Absolutely, you do. But, you know, everyone, you know, I know I've worked in lots of accountancy practices, and everyone has different views on this. And at the end of the day, it'll be your job and the client's job to have a case against HMRC.
Yeah.
So it's kind of like, where do you feel happy?
Yeah.
You know, if I've got, like, I don't know, over 11 months, 11 receipts, and in the 12th month that someone couldn't find it, you know, and it's for something that I know is vatable, and I feel like, right, I could definitely prove that.
Yeah.
It's about judgment.
It's like a materiality limit. Like, if you think about auditing, like, in the grand scheme of things, how crucial is this? And if I was going to have to defend this claim, how do I feel about that?
Yeah. 100%. So we've got to the point where we've got to the bank rec.
Done the bank rec, yeah.
Credit card rec.
Yeah.
You know, all of these payment services reconciliations.
Where's the money gone? Where's the money come from? Can we validate it? Like, this just makes me think about anti-money laundering regulations, and like, we are so close to the transactions, especially if you've got a client who's dealing with cash. You need to know what it is.
Does it feel like, do you have that feels a bit dodgy? Like, that is your gut is your guide. It will tell you exactly what you need to know. And that is the point where you need to think, okay, this is part of this service. We are kind of working for HMRC. Yeah. And we need to think, like, because you'll get in trouble if you don't get this right. Yeah. If you ignore something you've seen, if you haven't seen it, I'm not trying to scaremonger here. No. But if you see something and you go, oh, I'm just not going to mention anything or do anything, that's where there's a problem.
Yeah, I have a little freak out then.
Yeah, don't do that. Okay, and then after that, so we've done the bank reconciliation, the sales invoices are in, the purchase invoices are in. The next thing we need to really think about, which is definitely included in the bare minimum, which I don't always know if it is, which I hope it is like wages journals.
Oh, yeah.
Wages journals, because when you pay the money out of the bank account and you send it to the net wages account or wages payable, whatever it's called, that's going on the balance sheet, and it means that none of the wages have been actually recognized in the profit and loss. So then it looks like the business has got a lot more profit because you've not done the wages journal and therefore taken the actual wages cost out of the profit and loss. Yeah. And I see this so often. They're like, oh, I've posted it through the bank account. This is why we're experts. This is why we need to do our training. So wages journals need to be done.
So look at that payment that went out and go and make sure you have grossed up, like you've got every single element of what ended up with that total that went out of the bank.
Yeah, because you're going to have gross wages, add employers' national insurance, then you're going to take off the PAYE, the employees and the employers' national insurance. You might have pension contributions. You might have statutory maternity pay. There's that one, and this is what we need to realise, one payment out the bank, one payment in the bank doesn't necessarily mean just one-sided.
No.
What else element is that? And that is what a bookkeeper is. A business owner doing their bank reconciliation on an online accounting software will not do this. And this is where we are different.
Yeah. And the only way that they would have that coded correctly, I believe, if they didn't understand the nuance of that journal, because you see it so many times, don't you, when you take on the bookkeeping for someone and they've just been like coding it somewhere and you're like, oh, that needs sorting out. But if they were running their payroll through the software, it should put the journal in the right place. But 100%. They're only going to be doing that if they've got like one or a handful of employees, most likely. So this is a really common mistake that business owners make. So it's something to look out for. And actually, this is like, in that first meeting with a client, this is a really good opportunity to add value, because you can do a very quick like look through the P&L or the balance sheet and go, that looks weird.
Where
Let's
are the
dig
wages?
in. Yeah.
100%. then we've got things like prepayments.
Oh, yeah.
So if somebody has paid for something ahead of the date that the service or is going to, so for example, if you paid, I don't know, £1,500 for next year's insurance,
Yeah.
and the insurance like straddles the year end, and it's all, you need to work out what elements are part. We need to be matching income with costs in the right time.
Yeah.
So prepayments, and then on the other hand, accruals. So say you pay for something, for a service that has already happened, you need to do the opposite of that.
So if you pay it in the new year, but it related to the old year, do you need to do a journal to bring the cost into the P&L in the old year and then reverse that out over, or it might be like a month end. It depends on like materiality, doesn't it?
It depends on the size of the client, how detailed they want things. This might be a monthly service of prepayments and accruals. Wages is going to be there, so I would say as a book, like if you're offering bookkeeper services, I think it needs to be at least monthly.
Yeah.
Otherwise, maybe if it's an end of year job, you could do it at the end of the year. And that takes me on to income in advance as well.
Yeah.
So say you have received income now for services that you are going to be providing in the future, and those sales need to come out of this year and be put into the other year and then on the balance sheet.
Because otherwise you've got the risk that the client is going to be showing too much profit in this year, which means they might pay more tax, or they're just not going to have a clear view of the activities that they've got going on and what their projection is.
Exactly. So yeah, again, we're matching income and costs with the correct dates.
Yeah.
And then some people, and I've had this quite a lot, work in progress.
Yeah.
So the end of a month or end of a year, maybe they have started a project, and some of it's relevant to this year, some of the costs, some of the sales are relevant to this year, and some of the other year. So you may need to do some work in progress.
Yeah.
Lots of like accountancy firms actually do that because they'll be working on projects, and at the end of the month, they'd have, spent time, staff time, and maybe they've received some income relevant to that, but they need to put the rest into the next period.
Yeah. Reconciliations. So we was talking about like making sure that the balances at the start of the period you're taking the bookkeeping on for are correct, whether you've done that validation or whether the accountant has you've been able to check that the balance sheet agrees to the accounts that were filed. Do we need to go in and then we know we do. Why am I asking you the question? But we need to go and check that we've got like the right balance showing in the balance sheet for that bank account or the credit card statement or anything else that carries a balance.
So get statements at the end of every month for every bank account and just go down your balance sheet and check it's correct.
Yeah.
That's it. So if you've got loans or, and you can check the VAT, you can check, did the wages payable get cleared? Is there anything outstanding? That is your check.
What about one that I'm thinking of is when you get statements from suppliers and you have like, I don't know, maybe you're like a shop and you regularly buy stuff and they send you invoices all the time. Like that can quickly get messy, can't it? So every month you might get a statement from them and then it will show you what's outstanding and what has to be paid and when. And I think sometimes people will like, they'll send it to you as a bookkeeper and you're like, oh no, that isn't an invoice. It's the statement. We need to be reviewing that those balances are reflected in our software because we hear so many horror stories. Oh my gosh, I keep hearing about like AI being able to create or people using AI to create fake invoices. This stuff like it freaks me out.
Absolutely. So yeah, we need supplier statements need to be reviewed. I know that Dex has like a supplier statement reviewing tool, so you upload it and then it does it for you.
Oh my god, they showed us something the other day about how it can like detect like AI and
so cool. So you need to be doing that. If you haven't got a piece of software that can do that for you, you need to be checking supplier statements and you need to be checking statements, third-party statements for any outstanding loans, anything on the balance sheet. So, and review as well. Like this is what we're going to go on to next is like debtors and creditors. It is your job to review who owes you money and who does the company owe money to, and to go through that list, check that everything's right, and then chase it up or create when is the payment date going to be that you're going to make the payment to the suppliers. And that is some really good piece of work that you can provide to the business owner. Just say, I've done all of these reconciliations and this is where we're at. You're owed this amount of money and these who owe, do you want me to chase any of them? That's an extra service.
Yeah.
And these are who you owe money to. Are you making the payments? Do you need me to create a payment run? whatever, what part are you doing? That's like next level. You can do those things
Do
for
you
the
think
client.
that those, so the like looking at age debtors, age creditors, or receivables and payables, depending on how old you are.
Debtors and creditors, yeah, all of them, yeah.
Looking at those like aging reports and then saying to the client, you have these outstanding that you should follow up, and you've or you need to pay or whatever. Do you think that that is a sort of beginner level service, or do you think that if you're a new bookkeeper offering a service, this is like the bare minimum you were describing at the beginning?
Yeah, I think you really should be saying this is who owes you money and this is who you owe money to.
Yeah.
Even if you just print it out and give it to them and don't do anything about it. Like, I think maybe the next level is that chasing the money and payment runs and things like that.
And
that
we'll
might
talk
go into
about that.
Yeah, we'll talk about that. But providing them with, this is the snapshot of where you are right now. If you're not doing that, what are you doing? So I do think it's bare minimum.
Nice. Well, look, if you've enjoyed this episode, in our next episode in this series, we're going to be talking about intermediate services that you will be providing as a bookkeeper. So we'll see you for that next episode.